the start of this year, we identified three defining forces, which were global fragmentation, artificial intelligence, and also inflation. And not only do we think that they've proven prescient, but also that recent events, as you highlight, really have just added urgency to that call, whether it be events in the Middle East, where even if we do go down this path of a resolution, I think oil prices are going to remain with that risk premium over the next 12 months. But we also have artificial intelligence. New model releases so far this year, I think, have really evolved the bear case there as well. And inflation, where I think we're going to see some meaningfully higher prints in the months to come. So all of those themes, I think, really defining. And at the same time, you've got, equity markets really close to all-time highs. But I would say that to us that does make sense, because when you think about the underlying driver, not so much the emotional reaction to seeing, some pretty scary headlines, but the underlying driver is more CapEx being spent. And obviously that's not just associated with the AI build-out, but if you look at governments directing capital, companies also following suit. The most recent earnings that we saw, the past earnings season, saw a 12% increase in capital expenditure beyond AI CapEx. And I do think that economic value is going to flow to owners of risk. So that's why I think markets are at the highs.
Grace, is there a danger that actually the CapEx, again, is going to be inflationary? And if interest rates have to go higher, we're hearing central banks, they're just really worried of making the wrong call. So if inflation is significantly higher, there's some kind of policy mistake. I mean, does CapEx automatically go up because of this, or is there a concern that chief executives just spend less?
Yeah, I think CapEx is rising because the underlying nature of national security has changed. And this is one of the structural changes that I think, whilst investors shouldn't overreact to short-term headlines, they shouldn't underreact to these critical changes taking place beneath the surface of the market that's necessitating CapEx into issues of security, which is not just physical security, it's energy security, it's supply chain security. So that's why CapEx is rising across the board and in a global way. Now, as you say, Francine, it does mean that inflation is a risk. And one of the things we highlight in the outlook is the feeling that whilst we are equity bulls, we feel that portfolios aren't prepared for the full range of outcomes. And so we want income with inflation protection, so infrastructure, which still feels under-owned by the market. We think there's going to be volatility. So hedge funds, we think, are a really great asset to add. Gold as well. And yet when we look at our own client portfolios, around 20% is still in cash or in short-dated securities maturing in less than 12 months. And so that's why we think, actually, look, we want to be in there for the equity bull market that we still see ahead, but we do think that there's still portfolio resilience that needed to be added to capitalise on some of these trends.